Great. Now we're considering volume. Of course, volume is very, very important when it comes to trading FS or stocks or whatever financial institution that is represented on the chart. Volume is a key. As a matter of fact, volume can be regarded as oxygen to the market. What does that mean? It means when there is no volume, the market is as good as dead. So volume is very, very important. This is one of the key components you need to look into within the market before going either long or short in the market. So as we know that oxygen is a very important component in our lives. We need it to breathe. We need it to survive. So also the financial market needs volume to either show us the direction or where the market is heading to. If the volume is not present, stay out of the market. Then what is the volume? Volume is a measure of how much of a given financial asset has been traded in a given period of time, or how many times the asset has been bought or sold over a particular span. That is, it is the volume that reveals to us what is happening in the financial setting, what is happening in a particular financial asset that you're about to trade, be it CFD, be it stocks, be it shares, be it crypto or whatsoever. It is the volume that tells you what exactly is going on. Now, for our program, our simplicity trading system, the volume indicator that we use is named after a man called Wada Atta. That is the name of the guy who came up with this indicator. Of course, out there are millions of volume indicators, but Wada Atta stand out among its peers. So that is the name of the indicator we are using to actually identify the volume level within the market. So now by volume. Now looking at this, what we have here, we see beneath, this is a buy volume. Beneath here, we see this histogram, this bar. What can you see? You can see that all the bar here, present here, they are all green. Good. And look at the movement of the price. It moves I, and I. So this is a buy volume. You can see that this place that the bar are tall, and at the point they become smaller, at the point they grow bigger, and on like that. So this is a sell volume. Before you can consider to sell within the market, you want to place a sell, then you need to take cognizant look at what is your WAE, that is your Wada Atta explosion. What is it saying? Is it saying that there is volume in the market for the seller? If there is, then if all other components of the trading system tells you to go short, then you go ahead and place your sell trade. This is for sell volume. And if you look at it, all the bars here, they are well above this line. This tiny line here that is in the middle, the bars are well above it, except for a few places where you have, like in here, where you have the bar to be very, very small. But thereafter, you see the bar coming above the line and shooting up so greatly. Yes, this is a do nothing zone, and this is refers to, according to the designer of this indicator, as dead zone. If you look at underneath here, what you have, you see that there is this line here. All the bars that were formed, they were below that line. That is a dead zone. And if you look at what price is actually doing at that time, is actually consolidating. And this is a market condition that we're told earlier on that we don't trade. We only trade trend markets and range band market. But for consolidation market, it's not tradable. So, and of course, here we have the tool telling us the condition of this market so that we don't get ourselves involved and lose our money. So we see here that the bar is actually below this yellow line. So right about now, let's go to live chart to see what we have just explained now. Good. Here we have, here now we have, this is a chart of EuroCAD daily. Now this is WADA attack explosion. This is a line, this yellow line is actually the line that was showing on the picture that was displayed in the first presentation. Now, if you look at what is actually happening here, you see, when the bar is below this line, is regarded as dead zone. So you are expected to do nothing except the bar comes above it. When the bar comes above it, then you look at other components to see what exactly is going on. If the all other component of the system tells you to enter the trade, then you go ahead. Now let me quickly pick this. Look at this. Look at what the price has been doing all along here. Consolidating, cutting each other, and you could see the effect of that on the WADA attack. But as soon as the price get to this place, what happened? Look at the bar. They shoot quite above this dead zone. And here, look at the bar. Then the price starts coming down, coming down, coming down. Good. And as it keeps coming down, you see the bar was still very much bigger, telling you that the sellers are very much in the market. Now, at this point, here is also a consolidation phase. The market is about to turn, which what we refer to as turning point. Here, you see what actually Wadata was telling us. Can you see? Actually showing to us that here is a dead zone. And if you look at what price was doing, don't forget this is a daily time frame, meaning that there is no tangible movement on these days. Let's count them: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 days, 12 solid days. That is more than 2 weeks. Market was just consolidating. But our system here safeguards us from entering this market at this phase. And you can even see that the sell pressure started reducing at this particular point in time, where those bars could not come above this yellow line. That is to tell you that the market is about to reverse. So let's scroll backward to see for ourselves. And now look at this place. Here you see that this is the market. You see at this point, look at the Wadata. It comes above the zero line. And look at what happened all through this place. So, and of course, if you've entered the trade, if all other system component of the system has a line and you enter the trade from here, let's assume you were able to ride the trend up to this place. That is about 563 pips. For how many days? 17 days. So here we also see opportunity presented to us. At this particular point, when this particular bar was formed, look at what Wadata was saying. It's showing to us that the seller is about to come to the market, but here you could see that the bar was well below the zero line. So you don't consider entering, and I'm too sure that all other components of this trading system won't tell you to enter at this point. But at this particular point, look at what happened. Price immediately, the bar comes immediately out of the dead zone. And if you are to be in this trade, you exercise patience. This is wow. This is for 49 good days, 49 trading days. That will have given you 1,030 pips. 1,030 pips. Now, look at this as well. Look at this as well. Yeah, this is buy opportunity. Look at what our Wadata telling us. Look at all throughout this place, green bars. So it means if the trade, all other conditions are met here, we open this trade and we're patient enough maybe to even get out from this place. That is about 1,072 pips. That is a whole lot. So part of what we said initially is for you to know that trading is an art. So you must be able to master it. You don't chase after price. You are not running after price. You are not disturbed. You are not perturbed by what is being displayed on the internet. You see, oh, they just display this, you see this and all of that. You need to exercise patience. Let price come to you. Price comes to you. Let the price come to you. You are not chasing after price. You allow price to come to you. Then, as just like a good hunter, we allow the bird to sit in the right position. We allow the animal to come within its zone. So that is where you strike. You are not running after price. You are not chasing, oh, I need to enter trade. It's a must. I need to place a trade. I need to place. No, you wait for every component of the system to give you go ahead and you strike. That is how a professional trader trades. It takes time. It looks what actually is happening in the market. Look at this now. Look at what gold has been doing. Now let's go back to, look at this particular point. Look at what EuroCAD has been doing. So at this point, you could see that here, look at what was happening here. All of this place is what? Is consolidation. And look at the WADA Ata is telling you. It's telling you, don't go in. Don't go in. Of course, if the movement you are seeing here is tradable, if you go to lower time frame, like H1 and H4, but of course, it's time consuming because you have to wait, checking for conditions to fulfill. But taking a trade on the higher time frame give you more control over the market, because even each bar, each daily bar here represented by this bar carry bigger pips than what you see on the lower time frame. Like this particular bar, okay, let's measure this bar. Let's see the pips that it carries. Can you see only just single pip, single bar? We are seeing what? 109 pips. So it is better to have a good trading opportunity on the daily time frame and H4 than to go to M30, M15 looking for a trading opportunity. So we'll discuss further about this unique trading system in our next video. Thank you.